What's up, guys? Stas here. So a pretty mixed bag out there today in the stock market. S&P 500 down $10.52, down about 0.35%. The Dow Jones actually up $12, up 0.05%, with the NASDAQ completely dropping the ball, down $75, down about 0.8%. And in this video, we're going to talk more about the markets, very briefly breaking down some technicals, and I also want to share with you guys 7 stocks that I'm looking to trade, 7 stocks that I'm looking to buy here heading into the middle of June in 2020. So if you guys find value in this video, as always, hit that like button. Let's try to get 200 likes on this video, and consider subscribing to the channel if you want to see further content like this, and feel free to check all the free links down below in the description box if you want 2 free stocks from Webull, and if you want to be further connected with the Strive Smart community via the Discord chat and the Facebook group. So let's kick off this video like we always do, starting off with the S&P 500. And if you guys have been following my channel, you know 3120 is a main resistance that we've been watching for the S&P 500. And would you take a look what happened there today? We dropped $10.52, again, down 0.34%. And if we zoom in a bit here on the 5-day, 5-minute, you guys can see we closed above 3120 yesterday, which was a good sign, but we failed breaking out of 3130, which is the high that we hit as we broke out of 3120 in yesterday's session. So for me, guys, that's not looking too good for the bulls, right? We failed to break out of 3130. We failed to maintain 3120 as a support into the close, but overall, this is a healthy pull down based on what the charts are telling us. If you guys remember yesterday, I told you all how the markets are very overheated, especially the S&P 500. I believe we were on a 4-day, maybe a 5-day winning streak. When it comes to, 4 or 5 green days in a row for the S&P 500, you guys can see it here. 1, 2, 3, 4 days. Actually, it was 4. Today broke that streak. But either way, the markets have been very overheated. Pulling back to the 4-hour chart, you guys can see here on the RSI, the Relative Strength Index, we're at 70. We were actually close to 80 yesterday. And if you guys don't know, the higher we are on this RSI, the more and more overbought a stock, an index, an ETF is, right? So we were very overbought, very overextended, a couple green days in a row. So it makes sense that we are pulling down here. So for tomorrow, what am I looking for when it comes to the S&P 500? I'm going to be watching 3070 like a hawk, as well as 3130. I'm thinking if we open up red tomorrow, if we see futures push down in the morning, pre-market, large caps are red, we may be going down at 3070. Right? This is where we double topped, or maybe it wasn't a double top. It was a resistance a couple days ago. So watch out for 3070 to potentially hold as a support. That's if we pull down, but we could also completely break out of 3120, 3130. That's if we see a gap up in the morning, if we see large caps pushing up, and obviously that would be very bullish for the S&P 500. So for tomorrow, guys, 3130, 3120, and 3070. Those are 3 major levels I'm watching on the S&P. And when it comes to SPY, which is simply an ETF that tracks the S&P, many people actually use the SPY to gauge the overall markets. We're looking at these levels: $312. $307, right, roughly. And mind you, guys, we've talked about this before. SPY is simply the S&P 500 divided by 10, roughly, right? So 3070 on the S&P, 307 on SPY, 3120 on the S&P, 312 on the SPY. That's kind of the levels here that I'm watching on the S&P and how they correspond over to the SPY, the Spider S&P 500 ETF. And when it comes down to the Dow Jones, guys, we're seeing straight up consolidation. Again, we were up $12, but at the end of the day on the Dow Jones, $12 on a $26,000 index, that's really nothing, right? So this is straight up consolidation. If we take a look here on the 5-day, 5-minute, you guys can see it. We found a peak yesterday at about 26,300, actually 26,330 to be more exact. And today we actually broke that peak at about about 26,380, but still we're overall consolidating between 26,140 to about 26,380. So watch this range here on the Dow Jones. On the bottom side here for support, what I'm watching is it's going to be around 26.1, right? And overall, 25.8, 25.9 could also be a pretty major support here, as that is the previous resistance. So on the downside, watch 26,000, that general area. That should serve as a support for the Dow Jones. And on the upside, we obviously see the range here. The next resistance on the Dow Jones is around 26.9 to about $27,000. So breaking down this 5-day, 5-minute, if we break out of 26,380, which again was the high from today, expect the Dow Jones, maybe not tomorrow, probably not tomorrow, but maybe next week to potentially go up to 27,000, right? On the upside, that's the target that I'm personally looking at. And you guys noticed today the markets were a bit iffy, right? NASDAQ, S&P was down. The Dow was up, obviously, and we're seeing gold actually push up today, about $16. We'll get into that in a little bit, but whenever the markets seem to be rocky, down a bit, gold does well, because we all know it's a safe haven asset. The market's a bit hot right now, so if the market does pull down, gold could actually serve as a play here over the next couple of days. But again, we'll talk about that in a little bit. So going over here to the NASDAQ, down 75 points, again, down 0.8%. You guys can see this is simply a healthy pull down. We actually hit an all-time high today, believe it or not. I'm actually just seeing this now. So all-time high has been officially hit on the NASDAQ at 9741.97. That is just unbelievable. Breaking the all-time high previously, I think it was like 9736 or something. So we beat it by about 5 to 10 points today. So kudos to the all-time high hit on the NASDAQ today, despite tech stocks overall, FANG and Microsoft, they all closed red. So for tomorrow, guys, on the bottom side for the NASDAQ here, the support I'm watching is going to be at about 90, what is this? About 95.50 to about 9600. And why is this the support? Well, it's an old resistance from a couple days ago. We triple topped there towards the middle, towards the end of May. So, and you guys can already see it, we're holding it heading into the close, which is a pretty good sign here. So tomorrow, just watch 95.50, 9600. If we hold this level, I'm not saying it's going to pop to all-time highs again tomorrow, but there could be some potential to maybe rally back up to the all-time high, and heck, maybe even break it. I've said on the channel that the NASDAQ, I see it being the first one to hit all-time highs, obviously, as it's recovered the most, from the pit of the CV drop. And I also see it hitting 10K. I honestly see it hitting 10K. Maybe not next week, the week after, but at some point in these next month or two, I can easily see the NASDAQ hitting $10,000. And I'm not saying that as a price prediction. I guess it kind of is a price prediction, but always, guys, do your own research, make your own predictions, your own price predictions, do your own due diligence, right? Don't just trade anything based on my opinion, and don't just take my analysis as, what's the word? Don't just take my analysis as 100% correct. Take it with a grain of salt and formulate your own opinion, right? So overall, that's what the markets did today. And I almost forgot, jobless claims also came in. Every Thursday, we get the jobless claims metric, and it actually beat the Dow Jones estimate. We got 1.877 million unemployment jobless claims last week versus the Dow estimate of 1.775 million. And this is actually the first time the government's weekly jobless claims report came under 2 million since the week ended March 14th. So I guess that is good news, but at the end of the day, we expected that, right? We understand how the peak of the jobless claims are behind us. There were 6 million, 7 million, 4 million, 5 million, 3 million, 2 million. Now we're cracking under 2 million. So it's not much of a surprise that they're dropping, right? Over, week over week over week. But I guess 1.7 million, guys, 1.8 million, it's still a lot of people, claiming for, jobless claims benefits. So at the end of the day, America's still hurting. 42 million people have claimed jobless claims here. And we know that the employable number in America are what, 150 million, 170 million people here, are employed. The rest, obviously, they don't count for employment, whatever. And if you take a look at that number, 42 million out of 150, 175 million, that's like 30-40% of the actual workforce jobless, going for jobless claims benefits. So that's just, unbelievable, where we are right now in the economy. And we all know that the stock market is completely detached from the economy. That's completely evident as, we're seeing this insane recovery in the NASDAQ, S&P, and the Dow, despite the economy, still suffering, and it's going to continue to suffer here over the next couple of quarters, right? We obviously know that. So let me know down below, guys, in the comments, what are your thoughts on the markets in general? I would love to know. And for me, guys, I usually do trading updates. You all know this on the channel every single day. For me, today wasn't that active of a day. I actually picked up some more Tesla on the dip. We actually saw a 2% red day in Tesla, something like that, down $20, down 2.1%. I actually had some Tesla, I still have shares at $880. So I figured we pulled down today on this 90-day chart, I believe it was. 90-day chart, you're seeing the support, this 50 SMA acting as a support. So in my opinion, guys, this is a dip buy on Tesla. Does that mean it can't go down more? No, it could definitely go down more. Quite honestly, if we drop even further here, the next support could be around 840, which at that point, I might consider adding even more to Tesla. So overall, this is a longer term swing for me, not like a year, 2 years, but I do plan on swinging these shares for at least a couple weeks at this point. My price target, you guys know, is around 930, 940, mid 900s. So if I'm able to scoop up shares mid 800s on the dip here, I'm glad to do that. And I could be completely wrong. You guys know I've messed up trades before. I've lost money, right? I lost money on GDX. I've lost money here and there. I'm down on my SpaceX swing position, right? Or not my SpaceX, my Virgin Galactic swing position right now. So I lose money, guys, right? I'm not some kind of saint, but I'm here being honest with you guys with what I'm buying, and I'm really buying Tesla here on the dip. And I figured, I'm going to let you guys know, right? Because that's what I do here on the channel. And by no means should you guys go out and buy Tesla. I'm just, again, saying what I personally do. And as always, do your own due diligence. So let's jump into these 7 stocks now. One of them, and you'll notice, guys, a lot of these industries are the ones that have been battered the most throughout this whole CV. And we all know that they've been battered the most. And during the recovery here, they've been recovering, many of these stocks have been recovering the most, right? Having these ridiculous rallies. So the first one is going to be Wynn. And these gaming stocks are part of the stocks, the industries that have gotten crushed. Not video game stocks, but casino stocks, right? Like Wynn Resorts, ticker symbol WYNN. This stock went from $153 at the beginning of 2020. This is unbelievable. Down to $35 per share. What is that? Like a 70% drop? That is absolutely insane, right? And if you guys didn't know, I'm sure many of you guys know this, but if a stock goes down, from 150 down to 35, it drops 70% roughly, right? But for it to get back to 150, it's not like it has to go back up 70%. This stock now has to 5x to get back to where it was. So that is quite interesting. If you guys don't really look at, stocks that way, I really heavily consider you guys do that, because just because a stock goes down 70%, it doesn't mean that it takes 70% to get back up. This stock has a long ways to go to get back up to those highs. Again, it needs to 5x, or rather at this point, from where it is now, it roughly needs to 2x. And it already did 3x roughly from 35 to about 95. And at this point, guys, with the economy reopening, these casinos slowly reopening, more people are going to Las Vegas, right? Which is good news for Wynn. We're seeing the momentum start to push up, right? We broke $95, $93 roughly today, 93, 94 bucks as a resistance. We broke that resistance, and now we're maintaining it as a support, right? So for me, guys, is the run over in Wynn Resorts? I don't think so. As long as we continue getting good news about the economy reopening, this and that, more people traveling to Las Vegas and so forth, I think this stock will continue moving up. So at this point, watch for tomorrow, next week, for it to hold $94, 95 as a support. It's already doing that, it seems like. If we go to the 5-day, 5-minute, you guys can see all day today we consolidated. We retested 93, 94 on literally 4 separate occasions, and we did not break under it. So watch win $95, and I think the next range, or the next level we can get to, is going to be around $101 to $102. So overall, that's around a 7-8% potential here at Wynn Resorts, and don't be shocked if it does that in one day. We've seen these stocks, again, the most battered stocks, when they have green days, when they have recovery days, they don't just go up 1-2%. Yeah, sometimes they do, but they have massive days sometimes. We saw Wynn up yesterday like 10%. We saw it up 15% before. This stock could absolutely explode. So watch it at $95, guys. I'm telling you, there's potential here. And the next one, which arguably is overbought at this point, but I still had to cover it because it's absolutely on fire right now, is American Airlines, ticker symbol AAL. The stock, guys, you can't make this up. It was up 41% today, up about $5 per share. And to put that into perspective, $5 per share on a $16, $13 stock is obviously incredible. So why is AAL moving like this? Well, we got some good news out of the airline industry today. Airlines are adding flights to their schedules for summer. And a lot of these flights, from my understanding, they're domestic flights, so they're adding back their domestic routes. I forget how many American Airlines did add. I think it was like 75, 100, something like that, flights. Or I could be completely wrong, but I was watching CNBC earlier. They were talking about it. And American Airlines says it plans to fly 55% of its domestic schedule in July, up dramatically from May, when the airline flew only 20% of its schedule from a year earlier. So this is a good sign for the airlines, right? We obviously know throughout the whole crisis, less people have been flying, less of the planes have been moving around. So now that we're seeing more of the schedules, more of these flights being added back to the schedule, we're not at full capacity yet, 100% of the planes going, but 55% of the schedule, that's not bad. We're seeing improvement, and obviously investors absolutely love that. So AAL, definitely worth watching at this point. And again, it's a bit overbought here, but if this thing ends up cooling down a bit, it could definitely end up being a trade. And keyword trade. Am I buying airlines for the long term here? No, that's not an industry I want to get in for the long term. But if we're looking to get profits from the market in and out, income from trading stocks, right, which is what I do, how I make money, AAL could offer a fantastic opportunity. Whether it cools out, holds 1650, which I don't know if it will, and burst into the 17s, that would be insane, right? If it holds this resistance as a new support, that would be crazy. Or it could go down to what? 1330, maybe not that aggressively down, but let's say $15, 1450. If it's able to sell off a bit, that could open up a nice opportunity to buy into the dip on the bullish momentum here. So I'm liking the airlines as short-term trades here on this good positive news, but not long-term, guys. I'm not getting my hands dirty with the airlines, because at the end of the day, they are still struggling. The fundamentals are still weak, right? And they're probably going to be like that for at least a year or two at this point, until civilization gets back to normal, right? And just to quickly look at some other airlines, DAL up 14% today. That's Delta. Southwest, LUV up 5%. Save, Spirit Airlines crushed it today, up 21%. So a lot of these airlines are just completely on fire. And another stock here, Chinese EV company, the third one that I want to go over, NIO. NIO had a fantastic day today, up 6.6%, but it was actually up over $6.20 today, guys, or it actually hit $6.20 today, which is absolutely unbelievable, guys. This stock, ever since Goldman Sachs upgraded it to a buy. What was that? Yesterday, the day before? This stock has been going bananas, up 20% one day, 10% the next day, 6% today. This is just unbelievable. So in the short term, am I looking to buy NIO here in my swing trading account? Probably not, right? It's still a bit overbought. I would love to pick up shares at about $5, $5.50, but quite honestly, I'm not sure if we're going to get there. But for me, patience, I have a lot of it. Over the years, guys, trading stocks, I've developed a lot of patience. So for me, I'm willing to wait on NIO to pull back down, maybe 550. You guys can see that's an old resistance. Maybe we pull back down, test that. That could be an entry point. And if we break 550, maybe $5 could end up being an entry point here on NIO. And overall, I own this stock in my long-term account. So either way, I'm enjoying these pretty nice gains as I bought the stock in the $2 and the $3 range. But again, in my swing account, I don't own it there, and I plan on swing trading this one heading over these next couple of weeks, no doubt about it. And why? Again, NIO is moving up. Goldman Sachs upgraded them, and overall, their Q1 deliveries for their cars, they weren't too impressive year over year, about 38 deliveries versus 89 vehicles last year, but they see quarter two as being a great quarter, right? They're actually they're guiding 9,500 to 10,000 deliveries, and their sales between 475 to 500 million versus the 350 million estimated by the analysts. So management clearly believes that NIO, the company, is going to do well over the next quarter, and that combined with the push up from Goldman Sachs, that's pushing the stock up like crazy at this point. And another Chinese stock which did get delisted from the NASDAQ, guys, mind you, this is a very risky stock, Luckin Coffee. They had an accounting scandal, it's been longer than 2-3 weeks, like a month or two ago at this point. They had an accounting scandal. They completely botched their revenue. They got delisted from the NASDAQ. They were off the, you weren't able to trade it for about 3 weeks to a month. But today, we're seeing a ridiculous move, up 60%, up $1.50, and I'm looking at this very similar to American Airlines, right? Am I looking to long-term invest right now into LK? No way. Same thing with American Airlines, the airlines, no way. But in the short term, could it offer a trading opportunity? It for sure can, right? It for sure can. Today, we were up all the way to $4.94, meaning we were up way more than 56% at one point. We were up, over 100%? That's just unbelievable. We were up about 100% because yesterday we closed at $2.50. Today we ran up to $5, pulled down. Again, we're holding $4, $4.15 at the close. So this very well could be a dip buy in the short term here on this positive momentum. You guys can even see it, right? 490, we pulled down, held that EMA here on this hourly chart, uptrending into the close of the market. So overall, LK, very risky. Long term, I wouldn't touch it, but in the short term, as a day trade, short term, maybe even a swing trade, I'm definitely looking at it. So DKNG is another one here. DraftKings, this one is looking like a pull down as well to me, right? From $45 down to about $39. That opened up 12% potential. We held an old resistance as a new support at around $39. That's a very good sign for the bulls. And at this point, what I'm looking for, and you guys can see DraftKings is struggling right around this level. I'm looking to see if we break $42 because you guys can see we're trading in this channel at this point between $39.50 and $42, right, over the past 3 days of trading. So I'm thinking if we break 42, we're going to be moving up to the next gap, which is going to be about $45. So watch for the break, $42, guys. Again, like I've said in this video, patience is key. And over my years of trading, I've developed a lot of patience. So I'm setting an alert, $42.10. Create an alert. Mark is at or above $42.10. So if we break that point, TOS, ThinkOrSwim, will alert me, and I'll look to enter at that point, right? Because at this point, I'll see the momentum pushing up. That's a technical bullish sign, and that's what I want. And from there up to 45, that's about 6 to 7% potential for profit. And another one that did well is CCL, Carnival Cruise Line. And like I said, guys, a lot of these stocks that they've gotten beaten down due to the whole CV, they're recovering very quickly now. And it's interesting. A lot of them are green, while the markets overall today were red, which is a funky thing to see, right? Airlines green, some cruise lines green, banks were green today, and the overall markets are red. But either way, CCL is at a resistance point right now, which if it breaks, it could very well be a breakout, right? We've tested 1850 multiple times in the past, right? Back in the end of March, back towards the end of April. Excuse me, guys. Back in the middle towards the end of May. And take a look at what we did in May. When we tested it, we pulled down, but we held a higher low. The uptrend continued, and we actually held a higher low today on the stock as we bursted out of 1850 rather. So this is looking quite bullish to me, guys. We're in this wedge. Clearly, if I draw this, you guys will be able to see it. It's a funky wedge, but resistance 1850, higher low at about $17, and if we break 1850 here, which it's doing now, that's the squeeze above the resistance of the wedge, which is what we want to see. And from there, I'm not sure the next price target on Carnival Cruise Line. We might be able to hit the low 20s, based on these levels of, old support. So just keep an eye on this next gap for Carnival Cruise, maybe from 1850, $19 up to 20. That is very possible here in my opinion. So the last one, and then I'll give you guys a bonus one that just IPO'd, S-Bucks, also known as good old Starbucks. This, very similar to Carnival Cruise, is at a resistance where if we break, it could end up seeing a nice breakout move, right? In Starbucks' case, maybe not as much potential as CCL, as it hasn't gotten hit as hard, based on these charts. But you guys can see $80, $79, $80 has been a resistance over the past, I guess you can say month and a half, right? We failed in the middle of April, in May, end of May. So I'm thinking once we break 79, 80, $80, we could fill the gap up. 81.50, no problem. And how much does that offer? It's not crazy again, but it's about a 2 to 3% potential for profit there. And of course, above this point, which honestly, if we break above 81.50, that could be where the real gain comes in. Above that point, $84.50 to $85 could end up being the price target. So watch S-Bucks here. There's a lot of upside potential. And another one just IPO'd, ZI, Zoom Info Technologies. And I'm not going to lie to you guys, I have not done a lot of research into this company, but I figured let me talk about it very quickly and show you guys, because again, it just IPO'd. I doubt any of you guys or many of you guys know about it, but it's Zoom Info Technologies, and from my knowledge, it has nothing to do with Zoom Communications, but overall, they IPO'd, was it today? They IPO'd at I don't even know, but they were up $13 at the close, up 61%, and earlier in the day, they were up even more. I think they were up to the $42 level, so they had to have been up 70, 80 to 90%. So keep an eye here on Zoom Info. Again, I don't know much about the company. They just IPO'd, but go and do more research on it. The point of these videos, guys, is for you not to learn everything about the stocks that I talk about, but for me to give you some, basic knowledge about these stocks, go over some charts, so then you can go and do more research and learn more about them on your own. That's kind of the point of a lot of these videos at the end of the day. So overall, guys, and I almost forgot to talk about gold. Gold, again, did well today, but still it's overall downtrending. I'd like to see a break for gold out of this downtrend here on the intraday chart. You guys can see it based on this trend. And on the 4-hour chart, a good sign is that we are holding 670, or rather 695, 1700, which must hold, in my opinion, on a technical basis for the bulls, right? If we break that level, guys, gold could go back to 1600, in the short term, just technically speaking. But just watch 1700 on gold, guys. GDX is also taking a bit of a beating here. Recently, today it did pretty well, up 1%, but watch for the gold recovery, the GDX recovery. I think it's coming, but the question is when. And when we see the technical breaks, that's when we're going to end up hopping in. So overall, guys, that's it for this video. I hope you all found value in it. As always, if you did, hit that like button for me, and let's try and get this video to 200 likes. I challenge you guys, and consider subscribing if you want to see further content like this. And don't forget to claim 2 free stocks from Webull, valued up to $1,400. Those are linked down below in the description box. All you have to do is put in $100 into the account, and you get those 2 free stocks. So I'll catch you all in the next video. Thanks again for watching. As always, stay safe out there, guys. Peace out.